Webinar is now live. All right. Hey, John, I'm so excited. Tonight, we're going to have lots of great investors joining us tonight, close to 60 some, which is fabulous. And welcome everybody. We may have 62 investors join tonight. We really welcome everybody from the bottom of our heart. I'm Vinney Chopra, and then John Rusin, my partner. And, we are very excited to have you take the time tonight. We'd like to kind of do the presentation in 1 hour with question and answers. So let's get into it. This is a 506C. What that difference is that we can publicly advertise, and we can actually have investors invest in the fund that we don't even know. We, of course, want to give the first choice preference to our 400 investors, little over 400, who, would be given preference to join, into the fund and so on. Okay, super. So thank you again. I'll go right in there. Again, this is Vinney Chopra and John Rusin. It's a $50 million Moneil Multifamily Fund. Many of you might know our kid's name is Monica, our daughter, and Neil is our son. So we combined the two to make our brand, which is Moneil, Moneil Multifamily. It's a private diversified real estate fund to invest in safe and well-structured commercial real estate assets. And it's a 506B, C, just like it says there, for accredited investors. And I'm going to go right into it. Let's see here. Disclaimer. Again, this is not an offer to sell any securities or anything. Please do, the brochure is based on information which is reasonably put together, but you will be getting those who will decide to participate. You'll have to do the signing of the soft commitment. And from the soft commitment, we'll be taking the addresses and all the different information that you give us, and we'll be sending you the legal paperwork separately. So this is not any legal paperwork at all. It's just explaining, about the program and everything. So let's go to the next one. Tonight's agenda is going to be introduction to Vinney, the team, and the Moneil Multifamily Fund. I'll be doing it. Why the fund? What's the need for it? Why I did it after 15 years. Lots and lots of investors have been asking for us. I tried to do it in 2016. And then we went back to specific offerings like most of the syndicators do. But this one is a very unique kind of fund because it mitigates the risk. We'll talk about that. Fund overview, asset types, targets, returns, distribution summary, investment process, and the first 3 assets that we are purchasing with the money that we'll be raising, 12 to 15 million. Even though it's a $50 million project, which is at the total in about 4 stages, we'll be doing it. So in the very first raise, we are only raising 12 to 15 million. Out of that, 6 million is already raised. I want to say that right now. In one day yesterday, we got commitments for 6 million already. So we'll sell out very quickly. Again, humbly, I want to say I'm the key principal, CEO, and the founder of Moneil Investment Group. I'm a mechanical engineer, came from India with $7 in my pocket. Many years back, I have an MBA degree from George Washington University. That's how I came to this country as a student. Sold educational books and Bibles door to door. Some of you probably know that. A husband for 41 years and 2 children. My wife, Kanchan, we've been married, just happily married. And Neil and Monica. Neil went to Cal Berkeley, did electrical engineering and computer science. And UCLA, our daughter Monica went over there and did MBA also like dad. So we are 2 MBAs in the family. An active California real estate broker, by the way, but we don't sell or buy anything, but I keep my broker license active. And then bought first single family home 35 years ago, a duplex and many single family homes, but then started 5 companies so far. with 34 successful syndications that we have done. I have done to be on the loan and be the principal guarantor, whatever you would like to say, equal to about 4,500 apartment units only as general partner. Limited partner, I have other hundreds and thousands of them where I have invested limited partnership, but I only count in these, which is under my umbrella. Our so 441 million, and this will be Vinney's 35th syndication, general partner in Hilton Garden Inn principal, and vertically integrated, self-managing. At the peak, we had 135 full-time members in our companies. So that's very exciting and very passionate to build $2 billion in multifamily Class A yet affordable senior assisted housing and memory care divisions in this decade. So very, very excited. I want to introduce you to my good friend and partner, Shahid Imran. I came from India and Shahid came to USA when he was 17 years of age, 17 years. And as a young man, and then he's a big entrepreneur came from Pakistan, didn't know even English to speak, how to speak. He learned it right here. He did bachelor's in health science from Saginaw Valley State University. Actually, John Rusin, my buddy, my partner, went to school with Shahid, and that's how we got together. So he's a CEO and founder of the two businesses from ground up into millions in annual sales, and now we are joined together. So that's the exciting part. We have been, syndicators for so many deals, and now we have joined hands to build from ground up. Shahid has built 23 successful assisted living communities worth over 400 million. His motto is I want to help spoil the generation that has spoiled us. And that's what we have, that dream for this decade to really, really surpass that. And again, John, my vice president of the academy and partner in the senior living. So that's where, and then other part of the team is Monica Chopra, our vice president of the operations, Kanchan Chopra, my vice president, my wife, investor relations, Anna Martinez, vice president of the finance. Anna has been with us for over 14 years and also an investor in lots of our deals. And then John Rusin, director of investor relations and partner. And then Milton Colgrove for 15 years from Dallas, Texas, has been our attorney and counsel. And he's just remarkable individual. And then Nicholas McGrew, our real estate syndicator attorney who does all the legal paper. Let me move forward quickly. Now, many of you have seen this before, so I'll be kind of touching it a little bit, if that's okay. The key thing I want to talk about is that we are raising only 12 to 15 million in this round, then we'll shut it down. The fund will be shut down temporarily. We'll spend that money and invest into 3 assets that we are going to buy in the next 60 days to 75 days or so. And we're going to give you a glimpse of it, right? Now, track record is, long time. I've been in it for about almost 14, 15 years. And this is the property we bought, $52 million deal in Orlando. This is the one, we bought over there. The Princeton Park is another one, 35 million. And then this is the one in Austin, Texas. We just purchased actually September last year, just to talk about that, near to Domain in Austin, if anybody lives near Austin. And this has gone in value by $7 million. I cannot believe in 7-8 months, that property has gone in value by 7 million already. And this property we bought for 52 million. Looks like we'll be selling it within 2 years. We usually keep it for 4 or 5 years. And I think it's worth $60 million right now. And the market is very hot. So that's what we are contemplating, to be able to sell. And then, of course, senior living and the hotels. So that's the other thing I wanted to mention, that we purchased one Hilton Garden Inn, my partners, and then we got lucky because the local doctors stayed at our hotel during COVID, medical staff, and our hotel went from $6 million to almost $12 million in just year and a half value. So we are really looking for some really great deals as the COVID gets better and better. With the more travel comes, we have a lot of good relationship with the receiverships and things like that. Okay, this is what is the slide I would love to talk about, and then we can, answer questions also. So our general partners are 30%, which is myself, my teams, and all. Our owners are 70%. So our limited partners, A1, A2, A3, B1, B2, different options. They are 70% owners. It's a little bit different here. It should have said A3 also, but don't worry. And then debt is the one from the bank. I'm on the loan. Shahid is on the loan. Nobody else is on the loan. So we are the company and we are the principals who get on the loan. That's how we do it, all ourselves. So lower risk because we'll be purchasing 3 assets in this raise of 12 to 15 million. Then we'll stop and then we'll come back to you all again, maybe in 4 months or whatever, and say, we need another 12 to 15 million. We got these 3 more properties, which are very good and everything. So we're going to buy those. So we'll keep on buying until we spend 50 million. That's what it is. And it'll be growing and everything. Tax benefits, our investors will get full tax benefits. We do cost segregation studies and all that so that you could, look into diversification. That is the main thing. We are going to diversify our fund by investing into 4 categories, which we're going to show in a second. Preferred returns, our investors get paid first. Before we make any dime, our investors will be getting paid quarterly and the equity gains before. So there is a big incentive for people like me and my partners, general partners, to perform. So then only we get paid 70-30 or 50-50, things like that. And upside. So we'll be giving Class B investors the upsides also. As we exit the properties, we'll be getting more equity gains. So we'll be passing those to the investors right there. Now, the share price right now is going to be like $5,000, I think, per share. But as more properties come into the fund, the share price will increase. So the people who will come later on into the fund, they may have to pay 5,500 or 6,000 for the same share, because our investors, within the fund early on will be keeping, the whole, they are taking the more, in the front. And experienced sponsors, that's what that is. We are close to about $1 billion under our portfolio with Shahid and mine, together right there. So 50 million, please do look at it again. It's the 35th, investment offering. Key factors, accredited investors only, quarterly distributions, 5 to 7 year hold. Our target locations are Texas, Florida, Virginia, Missouri, Michigan, Tennessee, North Carolina, South Carolina, Arizona, and then to California, where I live, right here in the like there. This is a great slide. I hope everybody could really look at it. So we'll be buying B class multifamily, or B class in the sense they may be older but renovated so that they look and feel like a B class, which we're going to show you today, which is mission driven units and all. So we'll hold the properties for 3 to 7 years, looking at the market going up and up and when we should be able to exit. So that's what I've been doing. I've done 29 multifamily B class right there. 29 of these, individually syndications I've done so far. And then ground up A construction, 23. Shahid has done 23 of these ground up A plus class construction for the assisted living. So we are just match made in heaven kind of thing right there, And then stabilized senior assisted living. What we were finding that Mr. Shahid Imran, that REITs were coming, they were buying it from him, and then he was leasing it back for 10 years or something. They were making the profit and then just giving him a very small portion. So now we'll be purchasing the communities that are built by Shahid Ji, under his direction and his GCs, general contractors and everybody. He's watched it and seen everything what's gone into it, his, total thing. So we are buying those also. So we're going to talk about those two also today, what we'll be buying. We'll talk to you about that. Then mid-tier hotels, that's the fourth attack. So your money of 200,000, 500,000 or 700,000, we have one investor coming in with 1.5 million actually, and they put 750, I think, in A class, A3 it will be, and then B2 class 750. So they will be realizing the gains on both the sides, as you will see, and it will be target markets again. You could see. So we are going after population growth, job growth for our multifamily B plus, but then we are going to rent growth. These are in the B class, landlord friendly states, which always we like to do that, and then retirement friendly, because our assisted living, we do lots and lots of studies and capture rates, feasibility studies, because Shahid and I put millions of dollars upfront to buy the land and go through all the jurisdiction changes and permitting and architectural, everything, soil, you name it. We do all that with the green light. Then only we bring investors in. So we don't do the development like some developers do, where they get the money from the investors and do all the planning on the investors' time and money, and then they start building. We don't do that. So I just want to mention it. And then let's go to the next one. And I would love to answer questions. John, do we have some questions? This will be a good breather. What do you think?
So right now, Jeff Whitaker says he knows you from Keith Powell. So
oh my gosh, cool. Yeah, hi there. Keith Powell and I are great friends from Bakersfield, California. And he and I work together. Keith reported to me in motivational speaking. And he's a great person. Thank you. Yes.
And then another question. So for California, what do you plan to purchase there? Is it hotels and senior living?
Okay, very good. In California, at this time, we are not going to be buying anything. It will be probably 2 years down the road that we will be building the assisted senior living in the Bay Area and down south. That's where we are, planning. The biggest problem is the land, because we need about 4 to 7 acres of land, and the land is very, very expensive. So we'll probably look into some billionaires who would like to give us land for free, donate it to us. And that way we want to provide the assistance living at a very moderate price, because that's what our motto is: affordable luxury senior living. This is very good, John. If I may just show to our investors, give a little glimpse of what we are talking about. So we'll be buying this asset. I hope our investors can see what we are going to be doing. So going to play right there.
And memory care facility. Okay. I'm Amy Hannah Eckenrode, Community Development Manager, and I would like to invite you to join me on a tour of our beautiful community. Hampton Manor of Cape Coral features the only 77,000 square foot, one-story facility in the area.
So we are purchasing this one. Everybody, please.
As you enter the facility, you are greeted by 2 comfortable sitting areas, and behind our grand waterfall is the formal dining area for independent and assisted living residents.
It's A-class, brand new built, very nicely from ground zero.
All award-winning meals are created just for you by Chef Larry DeLuzio and are served restaurant style.
So we cook for every resident, personalized meal.
With 3 gorgeous garden courtyards, residents can enjoy our in-ground swimming pool, putt-putt golf, or the beautiful rock formation waterfall.
So the courtyards get them to go out and really have good exercise, good, good breathing of air.
Our stylish beauty salon will have you looking glamorous in no time.
So our residents, our residents, we call them, not tenants. They can bring their own beauty salon people there, no charge, but they just pay them whatever 10.
Our activities calendar keeps you on schedule and in the know.
So we usually have 55.
Our luxurious spa allows you a tranquil place to unwind and de-stress.
Yes, so we have the spas very nicely. About 50 to 55 caregivers for 80 to 90 residents. That's how we have. Yeah. And the nurse and other people and chefs.
The club room is designed for some hearty pool or card games.
Plenty of space to really enjoy the time in the community.
And right around the corner is our private library.
So we even ask the residents to bring their own, memoirs and books.
Enjoy afternoon snacks and entertainment in our poolside bistro.
So this is the community which
or
is
a relaxing conversation in our sitting room overlooking the waterfall courtyard.
Sure. And I think the movie theater is going to come, John, right? Yeah. And again, these are only one story, never elevators. We don't believe in that. We want a lot more.
The modern theater invites you to indulge your senses in a delicious bag of popcorn and your favorite movie.
So it's open to the residents.
The spacious sunroom invites you and your guest to take in an afternoon of conversation or perhaps a puzzle or card game.
And the units are very spacious. You'll see that. Then we'll go
Our
to the next.
Our activities room will be filled with bingo games, trivia, and arts and crafts projects for creative minds. Or enjoy watching a game show or the daily news with your friends in the social lounge.
So lots of places for them to meet and enjoy the time outside their units, And
we offer 89 spacious apartments featuring private or courtyard views, kitchenettes, and equally spacious restrooms, and the ability to control your own room temperature. Whether you like a studio apartment,
bathrooms are huge.
Our one-bedroom apartment.
So we have studios, 1 bedroom, 2 bedrooms, like that. And no kitchens, as you know, because that's main kitchen where we serve breakfast, lunch, dinner every day and snacks in the bistro. All those are all included in the $4,500 to $5,500 per month. Everything is included in there except the cell phone. That's all. All transportation, everything is all included in there. So this will kind of give you a little bit glimpse of that. I would love to take the opportunity to stop this. So this is one of the community we are purchasing, and it's a very exciting thing for us. It's worth about $20 million when it's fully stabilized. Right now, we built it, and with the COVID happening and all, now it's getting to about 33 to 35% occupied. We are going to buy it for $17 million. Oh my gosh. It's a big steal for us. And within 6 months or so, we're going to ramp it up to 60%, 70%, and then it's going to be all. Our break-even point usually is 52% occupancy because we manage all our assets. I just wanted to mention, I'm sorry, all these are my YouTube things, but let's go to this one. Now, this is another property we are going to be purchasing, and that is construction going on right now. We just wanted to give you a glimpse of how it all starts. The same thing which you just saw, finished product, it starts like that. And everything is very meticulously done, from foundations, from all the drainage, the site work, with inspections, with foundation, the whole bit. So this is one, and then we want to show you right now the built one. So I I'm going to just stop it maybe right there. Otherwise, it'll take a lot of time. But then this is the same one right now, which is already built. So we'll be purchasing it when we have certificate of occupancy at a very low price with the lumber going high already and saving 2 years of development and also construction time. We are buying it at a very, very low price, 15,800,000 or something like that. And as we have our own executive directors, leasing agents, the courtyards, as you'll see, so it'll be fully done, just like the one you saw before. It'll be totally ready, and that's when we'll be closing the deal. We put an LOI already, it's accepted. We are very, very excited about this one. This is already much farther along, in the last month or so. So we are actually very, very, please see inside. Yeah, I'm glad they're showing how good whole construction goes through, and each and every facet of it is taken care of. When we build with the high ceilings, with the pipes, the air conditioning, the whole thing. And the exciting part is when we purchase this or when we build ourselves, there is no different maintenance. There is no capex to be put in because we just built it brand new A+ category, developments. So I'll just kind of wrap it up right there and then come back to our other side, John. So I'll just stop it right there. I hope everybody enjoyed that. But let me come back here to our PowerPoint back again. Thank you. And I would like to take a little bit time right here, just like it's saying now raising money, get your commitments in. Please do. Please do. As you might know that, we'll be sold out. We got 6 million already yesterday in one day. And a lot of investors are calling us who have been with us for such a long time. Please put your commitment in, if you will. That way it has to go by the stamping of the date and the time, and then we'll just return the commitments. Those come after the 15 million. We are looking at 12 to 15 million total to raise. So it will sell out within a week. We know for sure it'll be totally done by next Wednesday or Thursday. Will be done for it. So at present, we are only raising 12 to 15 million of the total 50 million. Like I said before, you only fill out the paperwork one time and that's it. But then when we come for the second round of the raise, you could just say, Vinney, John, we want to put another 100 or 200 in these categories. You never have to fill up any paperwork. You just wire the money, we acknowledge it, and we increase your share all through the, campaigns and all that right there. So first come, first serve basis always. And currently we are looking at 3 great projects, but let me go over this number right here. So our target returns are 8% cash on cash for class A1, class A2 is 9% cash on cash, and A3 is 10% cash on cash, with class B1, 6.5% cash on cash plus 11.12% IRR. As you see that there, that means there is an upside. In the class A shares, there is no upside. And a lot of our investors like that because they said, Vinney, when you sell these properties, we have to pay phantom taxes because we take depreciation and then we get this, high price value add and everything with the high NOI. So they have to pay on the gain a tax. And this way in the class A, you will not get any gains at all. So no tax consequences. I wanted to mention that. In the class B, there will be, equity gain, but there is a lower percentage cash on cash per year, preferred returns of 6.5, 7.5, and then 13 to 15% IRR, which means almost like 17, 18 or 19%, because we are very savvy syndicators, or, with experience and everything, we always are looking out for, what's best for the investments, and then only we purchase them, right? How is the time, John? Almost 30 minutes. So A1 limit is 100,000 minimum, A2 is 250 minimum, A3 is 750 minimum, and then B1 is 100 minimum, and then B2 is 250 minimum. But you could actually divide up money. You could say we want A1 of 100 and we want B1 of 100 also. You could split that way, you know. So that's how that works. And this is the whole thing explained a little bit more in detail. And, you know, we are really, really excited. This is the same thing that we have been doing for 14 years. So nothing is different. Nothing is different. It's just that we added this option A1, A2, A3 is a brand new thing into it. Rest is the same, as we have raised almost 36 million. Like we just purchased Austin deal, we bought the Princeton Park deal. They were all in the same schedule, you know, with 70-30 split after we pay to our investors preferred returns. So we are incentivized to really work hard to perform. So we don't get money up front. We have to wait until we perform better and then we get paid. You know, that's how that is right there. Then that's the equity multiple as you're comparing these with other, you know, things like that. And then this also, John did a great job kind of sharing with you what you can look for cash flow coming into your bank per year that way as such, you know. And I'd love to answer more questions. We put investors first right there and all this. Now, how does it work? You may ask, you know, I want to invest. So reserve your spot by using the link, which is in this brochure also. We can resend it, but you might have gotten it already. So please reserve your spot, because once we total up 12 to 15 million, we won't take any more. And then sign the PPM. That will be next week. We are hoping to get our final draft of the legal paperwork, DACU sign. It will be, and you'll be able to get that. Please fill it out quickly. And then, of course, we need a submit accreditation letter. I do want to mention that about, it's a very simple thing. Your CPA, your attorney, or your financial planner could write on their stationery that you are accredited, and which is very simply, if you're making 200,000 last 2 years each year, or 300,000 or more as your family, you know, both husband, wife, or partner, or $1 million net worth, not counting the primary residence. So that is something we do need accreditation letter, which we could get from your, that's the simplest way to get it, from your CPA. It's very easy, you know, and or your attorney, or from a broker dealer, you know, if you know somebody. And then otherwise you could just go to verifyinvestor.com, and then you can just fill out over there. They will provide you that. So no big deal. You know, it's just very simple, and will help you, you know, if you have any kind of situation. So please wire the funds. We never give you wiring instructions in the email. Never, ever, ever. Monica and I text you. On your text, we talk to you, we give you the instructions of the wiring, routing number, and the account of the LLC of the fund. So that's where we'll be going. We don't commingle any money from anywhere. It goes straight into the LLC account, where we'll be spending that money to buy 3 assets, and then receive our written confirmation. And then we'll be providing you, you know, all the reports and logins to the portal, all that, you know, which we've been doing it for the last 14 years. So that way. So let's see, John, should I take some questions, buddy? Yeah.
Yeah, so we have a couple building up. So right now, so the first one, I'll hit answer live. So will Class A get depreciation benefit?
Okay, good point. Very good point. Because Class A does not have the depreciation, built in it, because there is no ownership. They are getting preferred stock, and they will be paid first, even before B gets paid. So they will be getting the cash flow with no upside. That's why the depreciation will not be coming. We could check with our CPA if there is a way we could, look at the books and all that. And if we could give depreciation, we can definitely figure out a way to give it, because God knows we get so much depreciation, because of cost segregations, and all these buildings are brand new. We'll be able to write off millions of dollars. So our Class B shareholders or investors will get huge negative K1s, which is fabulous. I know in Princeton Park, our investors got minus 319,000 for only giving 500,000. Oh my gosh. So they got huge losses, even though the property was making a lot of money, but with the cost segregation. So answer to that is, at this time, we think no, because there is no ownership, but we can talk to our CPA and also talk to our syndication attorney to see if there is a way to do that. Sure. John?
Awesome. So the next one is, will you be talking about the 2 to 3 assets that you're ready to purchase in the next 60 days?
Yes, right now. Actually, we are just showing you just a case study of, the lakes property we just purchased. I mentioned to you, we wanted to show you also some numbers, how much we paid, when we bought it, what's the occupancy, when it was built, all this, in the business plan, everything. This is the one we bought in Melbourne. Of course, I have bought 29 total. We have sold 22 already, 23. Atlanta one we just sold, bought it for 12,200,000, sold for 18,750,000, something like that, and gave 51.88% equity gains to our investors. Just happened last month. So I'm very pleased that, what I've learned and my skills, my experience, we are able to buy really tremendous assets. This asset over here, Lakes at Renaissance, near to the Domain, we paid only $113,000 per unit just about 7 months back. Now the going rate is $145,000 per unit. It's totally, we knew that the Austin is on a radar with the COVID, restrictions getting lifted. A lot of companies are moving there. Tesla, big time, Apple, you name it. Amazon, everybody's there. That's the new Silicon Valley. So we are looking for more assets in Austin area still, by the way, just to let you know. But, that's how we buy, right? This one, then Princeton Park did really well. It's gone in value by 7 million in just year and 3 months or whatever. Then we bought Hilton Garden Inn, and then this is the one I mentioned already. We bought it for 6 million. We refinanced it already, and it valued at 12 million. Even after COVID, it's a hotel. But my partners are very savvy. Those are my other different partners, Anshu Bansal and Ash Gaba and Shalu. So we are very strict, what we buy in that category. So this is another one. But let's talk about, we are really excited about the 3 projects. Are you ready? Okay, one is the stabilized or semi-stabilized, let's say, 89 units, assisted living community in Cape Coral. The whole movie you just saw, we will be purchasing it. Shahid Imran built it, with all his money and his investors' money, and will be cashing out at $17 million, which is a steal, because it's worth, once we get to like 80% or 90% occupancy, we are at 35% occupancy right now, and we just are getting daily so many applications coming in. So we are very excited. We already got the loan and everything. So that's our one property we'll be buying right there. Okay, please see the separate brochure. We'll provide you that. In negotiations to purchase a multifamily in the emerging market of Knoxville, Tennessee. I don't know if you all know, Tennessee is on the radar like crazy. So we'll send you also a whole OM on that property also. So that's the second one. The already built 92 units assisted living in Adrian, Michigan. That's the one I just showed you, the second and the third video in this presentation. That is going to be completed in the next, let's say 2 months, 2 or 2.5 months. Once we get certificate of occupancy, we'll be closing on that one. So that's where, those are the 3 assets. all projects are first come, first serve and everything. But let's go here. So this is the Hampton Manor. You already just saw it. I hope you could see that. We are very, very excited about it. My wife and I were there just not last week before. We spent a whole week over there, and I have videos after videos of all the residents over there, and all the different nice videos of the Cape Coral facility. I mean, this is worth 20 to 22 million, no way, in about a year's time, for sure. We know that. And this is how it is inside. You just saw it. The second purchase is going to be 110 units, B class units. These are the seller put in $3.6 million already. New roofs, new parking lot, new interiors, new appliances, new ACs. So you say, Vinney, why are you buying this? Because they did not increase the rent. So we are buying it so that we could bump up the rents, as we take over by $150 to $250. We'll be doing some 500,000 or so. We talked to the lender today, to the loan broker. We are getting 500 finance as the capex to make smart homes with the Nest, with the plugs, with the USBs. And then we'll be probably changing the refrigerators to steel, all steel appliances over there, which will even dictate more rent increase and things like that. We just want to mention to you, Knoxville is big time. Nashville is very expensive right now. I wish a lot of properties came on my desk in 2010 and 11 in Nashville. We were so tied up in Texas. We made really good money there, but Nashville is so high. Knoxville cranes are coming. There are Starbucks opening, Amazon's, a lot of businesses coming. That's where we want to be as a, savvy syndicator. Number 2, best place to live in Tennessee, right there. Number 2, coolest city with low living cost. Number 3 in the job growth. Number 5 in the US travel destination, because of Dolly Parton, Dollywood is right there. People have to come to Knoxville. A lot of tourists come there. Top 25 cities in the country, number 7. And then job market in number 11 right there. So mission driven rents, just like you see here, we'll be doing, closing on it in, let's say, 60 days. We got the loan already approved and everything. Approved from the sense we got the letter. So we are all in the negotiation of just the price limit and all that. Prime to light value ad programs centered around adding washer dryer connections. That's right. Yeah, we talked about that. Granite countertops, stainless steel appliances, and the South Knoxville area, which is very rapidly growing. And the clientele is amazing young professionals who are really taken care of. And John, go ahead, John, you should talk. I've been talking all this time, sorry.
Yeah, we love the asset. It's 100% occupied. So what they're doing, so we toured it the other day, they started raising at 50, then they were going 100, then they were going 150, and people are staying, they're renewing their leases even at these large rent bumps. And why we love this, there's virtually no deferred maintenance. So no major things, all the roofs, the HVACs, the interiors are all beautiful. And the current owner right now, they fired their property management company because they weren't realizing the rents, their loan is coming due. It's time for them to sell. So it's a perfect opportunity for us to take over, realize the rents, and it's far below the market. So the average rent at this community is right around $8.99 if you average it out. In the market, $1,500 is the average rent in this market, in the sub-market specifically. So it's very, very prime for great growth. So we're very excited.
Thank you, John. Really appreciate that, buddy. And these are some of the pictures. If you can see the nicely done everything. And I don't think we put the pictures of the, very nice young professionals enjoying, outside with the barbecue and things like that. The podium, they got the exercise rooms in there. They got just great, facilities. So that's one. That's our second asset, by the way, we'll be purchasing. Then our third purchase is going to be Hampton Manor of Cape Adrian, actually, 92 units in Adrian, Michigan. That's the second and third movie we showed you. So that's the purchase price of 15.8 million. It's a steal. It's a total steal, because if we take right now the project, because Shahid ji, our partner, is the consultant and also partner in this deal. And what has happened is he started it, consulting with them and everything. And now, with the lumber going high and everything, they wanted to sell it to a REIT. They said, Shahid ji, please ask, your partners if they would like to buy. So he was able to make a very, very good decision along with my help to say, yes, we're going to buy it. And it'll be worth also 18 to 20 million easy as we take over the asset when fully built with the certificate of occupancy. And by the way, we already will be hiring executive director. We own 3 nearby there, by the way, already, and we are running them. So, which one, John? You're from Michigan.
Yeah, so Hampton Manor of Woodhaven, Bedford, Brighton, Shelby, Taylor,
yes,
Canton. So there's a handful all in this area, all in Southeast Michigan. So yeah, a lot of them.
Exactly. So we know the market. We know what people want. We have done the capture studies. That's how, we are able to. And usually when we open up, we want to be 50% occupied. We break even at 52 to 54% because we run our own vertically integrated whole management with executive directors, managers, leasing agents, chefs, caregivers, full training for 6 weeks and all that before they are brought onto the site to deal with our residents. We are 80 years to 103 years of age. And the exciting part is that we had 0 death. In COVID, all these 14 centers, our communities that we manage, we had 0 death whatsoever. That mostly came from the, nursing homes and things like that. But this is our game plan right there. All that investor cash on cash, all that 92 independent assisted and memory care. I do want to mention that in every community, we have about 20% memory care also, because a lot of our residents, this is their golden year. We want to have them the best of the best living conditions and eating right and gaining weight, living younger, living, healthy. And then when they get dementia or get into memory care, we move them into that, with the family, it's much easier. And then otherwise they go to, hospital or things like that. So I would love to answer any questions, and this is the exciting part. We'll be purchasing it for even lower price than 17 million that you just saw, which is already built and 35% occupied. But this will be, 0% occupied, but we'll be able to do the marketing that when we close on the deal, we'll have so many leases already, because we do that always in and out. The websites are getting made. We'll be doing the SEOs. We'll start advertising when it's about 80%, 70% built, which it almost is. So we're going to start because the LOI has been accepted. Perfect, from the sellers. So we'll be utilizing economies of scale. And Adrian is going to look just like this. See, that's the thing. We have cookie cutter, and that's why we can build them so cheap. Many of the loan lenders tell us, holy cow, how can you build it for 16 million? The other developer told us it's going to cost 24 million or 23 million. So we have the recipe to build it with cost-cutting measures, economies of scale. Our general contractors know what to do. We have 100 to 150 workers every day working. Punta Gorda, we built 80% in 6 months. And my wife were there, just two weeks back. and we were there. I took a lot of pictures. We'll, provide, anybody would like to see those, and we can share with that also, right? So now let's see, John, if we could kind of come back and answer the questions. Is that okay? Sure.
Perfect. Yeah, so there's a lot of great questions. So the first one's from Ramesh. Who will give the K1? Is it the fund or individual property?
Oh, excellent, excellent. Each separate property will be each entity, LLC. So you have to have a complete single purpose entity. It's called SPE for each property to get a loan. We cannot get a loan on the fund level, not. We have to have a different entity, and we will also have bank accounts, operation, management, all those accounts, CapEx accounts for each LLC. So I'll be operating, the team will be operating each asset individually. So we'll have loan, we'll have payments, mortgage, expenses, incomes coming by each property, right? So at the end of the year, we'll look at how many investors are there, how much money portions they have invested into the fund, and then we'll take the K1s from that property. From that property, K1 will come into the fund K1. So we'll be doing a profit and loss statement from each property coming into the profit and loss of the fund, like end of 2021, 2022, 2023. It's going to keep on doing it for 10 years almost, or 7 to 10 years. And then from the fund K1, we're going to give it to our investors in the class A and B. Again, we have to check on A, but B will be getting that. Yeah.
Awesome. All right. The next question is, when do you anticipate the timing of the second round of investing?
Very good point. I would say definitely this is now in May, right? June, sorry. So we'll be tied up for 3 months, at least 90 days. If, the lender, how it is, if the loan takes a little bit longer, we may have to extend it a little bit. But, next round might be in December, let's say, 3 months, June, June, July, August, September, maybe November, October, November. Yeah. Because we have 11 other projects that we are looking at right now, which will be building, and we are also underwriting deals in emerging markets, and we are looking at hotels. My partners were in New Orleans. They were actually looking at another hotel in Austin just last week. So you never know. Once we get a good deal, we'll jump on it.
All right. And so the next question, for the next Knoxville property, what's the plan for renovations if the property is 100% occupied?
Very good point. Very, very good point. See, we are not going to be doing a lot of demolition. Or, doing the, flooring and all that, right? If we do change, we're going to first, look at that. If we do need to change the granite or not, if only one thing can pop up, and we can say by painting, we can only do it when there are, vacancies, right? Otherwise, we are losing money. So we are not on a high-strung budget, only 500,000 we are planning, and that can take us 18 months. Our loan broker told us we could use that money for 18 months to do the kind of things. So we are not on a very tight schedule. We're going to make money, bring the money, cash flow, so that we can make it happen that way. Yeah.
All right, and the next one's from Bharat. So thanks both of you, John and Vinney. So thank you for joining. We appreciate that. The next question, will Hampton Manor of Punta Gorda be bought into the fund also?
Oh, okay. It will be. Actually, everything we are building, I am building 4 projects. As you all know, many of you are investors in it. You'll be handsomely paid with the fair market value, everything. And then we'll be bringing them back into the fund. Exactly. Once we close this $50 million fund, my vision is next fund of 100 million. So my total goal is $2 billion with a B, $1 billion, mine, John's and Shahid, our partners, and my, other partners, Anshu and Ash. with the hotels, to really make it big, because this mitigates risk. That's what I'm really, really liking the whole structure. We are very small mom and pop company, but we are thinking big, and I know we can deliver at a personal level. Yeah.
Awesome. So we got a lot of good questions coming in. So are these properties from the same seller, or are they each individual sellers?
Individual sellers. I'm so glad you said that, because the Cape Coral, Shahid, our partner, is one of the partners plus his investors. The one in Adrian, Shahid ji is also in there, but other partners, right? So they are not the same. Different LLCs, different structures, everything. And the one we are purchasing in Knoxville is a different seller.
Awesome. So the next one, can you please explain your definition of a soft commitment, please?
Okay, surely. Soft commitment, just like it says, is that you are telling us that within 2 weeks or 3 weeks, you'll have the money available, because you don't want to soft commit now and not have money, because your commitment is soft until you fill out the paperwork, DocuSign, and then we send you the wiring instructions and you wire the money. You are only admitted into the fund investment when the money is in the bank. So we go by the whole wiring. It's very crucial that we make sure that all the investors who are logging in right away and doing these things clearly, they get the first chance. After that, like I returned 3.5 million in one of my offerings, because some of the investors were so much delayed and we couldn't take it, So no problem, we'll return it back to you, But
Awesome.
First come, first serve in filling out the paperwork. First is the soft commitment. Unless you are on the schedule for soft commitment, you will not get the legal paperwork at all, first of all. Secondly, once you fill out the paperwork, we'll give you the wiring instruction through the text. And then the third part is to wire the money, right? Yeah.
Awesome. The next question is...
I just want to say one more thing. Sorry, John. I've been doing it for 14, 15 years now. And most of my investors, 99.5% of my investor commitments come through for me. I know a lot of syndicators say, oh, I want to raise double the money, then maybe half of the money will come in. It's just a different atmosphere with my investors, 400 investors. They have seen me perform. So when they do soft commitment, it's kind of like hard commitment. I just wanted to mention that. I really respect my investors, friends. They are really, very, very near and dear to us, Yeah.
Awesome. All right. The next question is, will you spend all the money you collect for the 3 properties?
Oh, yes, definitely. Because we know how much we need for one property, how much we need for second, and how much we need for third. So, we'll spend all the money, even if it's left over. Let's say, 50,000 or 100,000 or something. Our investors don't need to worry at all, because you will get your returns, clockwork, and you will start getting your returns. The first property we close, we are willing to start paying you from that point forward. That's what it is, our commitment to you. So it's like, let's say about 2 months, let's say 60 days usually to close on the deal. So we are promising, even if I have to pay in some money, in the front, or Shahidji will be able to, put the money in the fund to pay, our investors. Yeah.
All right. So 3 more, and there's a couple in the chat. So we can go as long as everybody wants, or as long. So the next one's from Ramesh. So how will you transfer to each property by creating a single or SPV for each property from the fund?
Oh, wonderful. Wonderful. See, the equity will be coming from the fund. Equity, just like, we have been doing specific offering, right? So we raise all the money in that LLC account, and then that whole money is spent to pay the equity at the closing to give to the seller, right? And the loan, right? Closing costs and all that stuff, and the other fees. So same thing, fund is like the bank, if I may say, they will take the money, will go investors' money into this one property. Then another second closing will take the money from the fund and buy the equity. So fund owns 100% of the equity of the property, 100%. Then within the fund, the investors own 70-30, right? That's how it comes.
Awesome. All right. So that's good. So existing investors in such senior living, will we be able to do a 1031 into the fund?
Okay, I'm so glad you're saying that, because what has happened is in the senior assisted living, the first one I showed you in Cape Coral, I think we have to raise 6.5 million or something like that. So we do have a commitment of 1031 a tick. As some of you are very savvy, all of you are very savvy, what happens is that you are not able to come into a syndication is a tick with the 1031. But in the Cape Coral, we are able to do tick. We have two investors at three even right now who want to bring 1.5 million, 2 million tick, and 450,000 tick. So that will be a portion of that Cape Coral will be in the tick, and then the rest of the portion of the Cape Coral will be bought by the fund. So that's how it is. We are looking at. So if somebody does want 1031, that's the only one asset you can do it at this time. But maybe in the future, we might look at again another asset if we have a lot of requests of 1031. Usually I've never done. In the last 15 years, I've only done once. And my very good friend, he brought 750,000, I remember. And I did it one time only. But, it's in this one, we have a lot of money coming in. So we thought we'll do it. Yes. You cannot do it for 100, 200, 300, 500. No, million is the minimum. Oh, 450 also. We don't know if we'll allow them, but we'll have to see. Yeah. Thank you.
Awesome. All right. How will you distribute the fund among the three properties?
Okay, good point. See, it's going to be based on how much we need, with because the prices are different, right? We are looking at the Knoxville deal, only 110 units, close to that. At 100 a unit, that's only 11 million, 10 million. We are still negotiating, right? And then another one is 17 million, right? Another one is, John, how much was that? 15.8. Something like that, right? So it's going to be based on what kind of loan we get, right? Is it 75-30% or 80-20 loan? So that's what is going to determine how much. But investors don't have to worry at all, because your 100, your 200 is in the fund. So from the fund, it's going to be invested into these properties, right? So you will get your returns at the top level. Yeah.
The next one is, will you provide financial project or financial projections? Maybe I think it is that they're asking.
Okay.
Will you provide
projections? Yeah, surely, as we buy the properties, we have already looked at financials, ourselves and everything. And that's why we are buying, right? And I mean, that's the reason why we are already so excited about our Knoxville deal. And we are so fortunate that we are getting for 15.8. We have done the projections. We know how, other properties have performed around that area. So definitely, yeah, any investors who like to get that, we don't like to bog down too much, because a lot of our investors are very savvy investors, and they have looked at and they've seen, who we are. So that way, but we can provide. Yeah, no big deal.
Another good question. So how are the distributions made to people when different points of time in the fund, say you join, now, and then someone joins in a year from now?
Oh, wonderful. So I'm so glad you said that. Totally. The people who will come, first serve, you are going to be getting the cash flows coming to you way before than the people who come next year. Let's just say that, right? You already made your money on your investment. And if they come in now, if the share price, John, I don't know, I should have asked you, is it 5,000 per share? or 1,000 for shares. Usually we do 1,000 or 5,000. I should have looked at the PPM draft. But anyway, the price of the per share is going to increase because the people who come next year would come into a fund which is already performing, and the properties are already churning money and things like that, right? So it'll be a premium that the other investors will have to pay to come in there. How do we pay our investors? Monthly. We don't do, oh no, sorry, quarterly. I apologize. Most of our investors are not waiting by the check to get it monthly. So we never do it monthly. It's quarterly done, and we ACH money into your account. You tell us what account and the routing number ACH. We drop that money into your account. After the quarter is over, I have a meeting with a Zoom meeting just like this one for our investors to come. We record it, we send it to those who couldn't make it, to everybody, so that you could see the financials, you can see everything. Totally transparent company. That's how we run our business, with total integrity. Yes.
Perfect. So the next one I'll answer quickly. So everybody will get a K1. And so it's a question on depreciation. So depreciation will only offset other passive income unless you're a real estate professional. And so we're not CPA. So we encourage you to talk with your CPA to see if you qualify to become a real estate professional. And in that case, the depreciation will come off your passive and active income, but it'll only come, if you're not a real estate professional, it'll only come against or take off your passive income. So answered that question. And then to the next question, how does it work to invest through a self-directed SEP IRA?
Oh, okay. Very easy. Very, very easy. You will just do like individual accreditation or entity accreditation. So you'll be able to talk to your EQRP or SEP custodian, and we'll provide them all the information they need so that they could vet the I think that's how it's called, vetting the investment. And I'll be able to fill out all the paperwork as the sponsor, and we'll provide all those. We get so much money coming through retirement plans. We have raised about 157 million, I think, close to it. Even more if we talk about Shaheed's, another 400 million. I'm sure he's raised another 120 million, at least 30% of 4 million. I just took it. So we have raised millions of dollars. And, so that way, I think you could come cash. You could come through no cryptocurrency yet, by the way. Sorry. But, you can bring cash. Retirement funds will help you with all that. Yes.
Awesome. All right. The next one, what will be the split of profit between sponsor and LP after return of capital?
Very good point. Very, very good point. That is the slide. If you go back there, it's 70-30 split up to IRR of 11 or 13%. So we get paid at the back end more. We have to perform very, very nicely to make sure that we give our investors returns. First of all, the class A, class A1, A2, A3 of 8, 9, and 10%. That's, first we have to perform to give those. Then B1, B2 is the one where there is an upside built in it. So we have to give our investors 11% IRR, which could be 13% ARR or 14% ARR per year, by the way. So you're getting 6.5%, I think, at 100 or 7.5 at 250. You will be then getting a jump of equity gain from 7.5 to, let's say it's 13%. So you'll get 6.5% jump to get to the IRR before it goes to 50-50. So we do not make our money until we perform very well for our investors, and our investors like that. So you are actually peacefully sleeping and giving your investment, and you'll get the portals to see the pictures, all the different things happening with your money, with different projects. You can see how much you put in, how much returns we are giving you every quarter on a dashboard. We do all that through Appfolio. Appfolio is the company that our investors are already there, and we'll add new investors into it like that. And then we'll do quarterly meetings. That's the other good part. Quarterly meetings like this one will show the P&Ls, the rent rolls, the new things we are doing, the CapEx, all those things. I take a lot of pride in that. Yeah.
Awesome. So the next one, will investors be given copies of the results of each LLC that are reporting to the fund?
Oh, yeah, totally. I mean, not all the investors are given the tax returns. No, we cannot give legally because it's got all the different particular data, personal data, EIN numbers, and social security numbers. But if you have some, like maybe in the last 15 years, maybe few investors have asked. So our accounting, VP, she's able to segregate a portion which is acceptable to the lenders or things like that, right? But we cannot give you full tax returns. No.
Awesome. And then the last question. So how about the fee structures?
Oh, perfect. I'm so glad that question came up. It's very similar. Always we have done the same fee structures as, loan guaranteeing fee or the due diligence, because, we have to run our ship, right? Asset management fee. And then of course the disposition fee, 1%, whatever it is, or refinancing fee, just like any other syndicator does, or I've done it in the 29 deals, everything is the same. Nothing to worry about. We are not gouging or anything like that, Yeah.
Perfect. So what's the next step if someone does want to invest with us?
Oh, okay. The next step would be definitely to please reserve your spot, which is by filling out your name, your entity, how much you want to put the money and everything. And John and I get right away an email as soon as an investor fills out that form. Actually, it's a Google form. And then from there, we'll start the process to get you the PPM as it gets ready next week. It's always first come, first serve. Please, no hard feelings. We appreciate your really coming tonight, and we really appreciate everybody, to really, it takes some time for deciding, and no worries, because, if we sell out, then you could wait for another 4 to 5 months to come into the fund when we do our next raise, But in this one, we'll only need from 12 to 15 million, and we'll stop it. Just like I think one of the very savvy investors said, do you want to keep the money, lying around? No, we don't want to, that's not, yeah. So that way. So please do reserve your spot. And if you have any question, please text me. My, cell phone number is 925-766-3518. John, is there anything like that, buddy, or no? We didn't.
The last slide.
Oh, it's the last one. Oh my gosh, I didn't even know that. I should have done it. I apologize. There it is. That's me, Vinney Chopra, and John also is right there with me. VinneyChopra.com is our website. SeniorLivingInvesting.co is our other senior living website. Vinney at MoneilIG.com, which you are getting emails and everything. That's my direct email, right there. And cell number is 925-766-3518. And please click to reserve your spot. And we look forward to really, really working with you. I want to thank everybody that you stayed along with us. And thank you for taking the time tonight to be with us. And it means a lot.